Hello everyone, welcome to Smart Market Insights here on Kalkine TV. I'm Sage. Today we'll be throwing some light on why Australians are borrowing more via BNPL, Payday Lenders. Prices are skyrocketing across Australia, and the global supply chain woes, floods and the COVID-19 pandemic, as well as the Russia-Ukraine conflict, is escalating. Everything has mounted up, causing the country's price levels to soar. And because of surging inflation, the cost of living is getting challenging for Aussies. They are recruiting riskier ways to meet daily expenses. In 2021, Australian inflation was 3.5%. However, wages increased by only 2.1%. When the rise in wages is lower than the inflation rate, most of the population falls behind. Australians were already struggling to meet daily expenses because of the pandemic woes. And now, with the recent Russian invasion, petrol prices have increased by 32.3%. Prices of essential items such as vegetables have increased by 6.1%. And so often, Australians are left with no choice but to borrow through BNPL and Payday Lenders to keep up with growing expenses. And under BNPL, people purchase the items and services and pay later. As far as Payday Lenders are concerned, they give short-term unsecured loans. However, the interest rate charged on such borrowings is usually hefty. And due to rising inflation and almost stagnant wages, Aussies have been inclined to seek more BNPL and Payday Lenders to meet their daily expenses. Let's take a look at the repercussions of such borrowings. What happens if the population depends upon BNPL and Payday Lenders? Because the prices are skyrocketing and the wages also remaining almost flat, Aussies are getting into deeper debt. Credit card bills are rising and repaying the debt is becoming a challenge. Credit and bills for the Australians are climbing consistently higher for the first time in 4 years. One of Australia's prominent subprime lenders, Cash Converters, remarkably grew its loan book in 2021. The annual interest rate of its borrowings is 48%, and the interest rate is so high, but people have no other option but to seek out their loans and meet their household and other expenses. And so people fall into a spiral of debt in which most of their following income goes into the repayment of these loans. Thus they seek new loans and the loop continues over and over again. A recent report by RFI Global stated 38% of Australian consumers use pay later apps for household bills and 37% for groceries and 27% for petrol. Conclusively, consumer advocates across Australia are demanding better consumer protection. While consumer behaviour psychology might push more Aussies into this borrowing system, people should be aware of the repercussions of every financial decision. Thanks for joining us on that report, and that's all for now, and hopefully your expenses aren't spiralling and you are able to stay on top of your debt and other encumbrances. We will be back again with the exclusive Smart Market Insights show. Till then, keep watching Kalkine TV, stay safe and well, and for the latest market updates and related insights, stay tuned. Sage here signing off for now.